Gas prices are ticking up slightly. The national average for regular fuel is up around 7 cents over the past month, but it's not just the price of oil that's kicking up costs. Yahoo Finance's Rick Newman has the story. Hey, Rick.
Hey guys, I came across some economic research recently into profit margins on gasoline sales, and I knew I had to look right into this because of all the conversations I've had with our audience members and drivers about why are gas prices so high, who's making out when gas prices go up. So it turns out, if you think that that retailers are charging more relative to the wholesale price, you're actually right about that. The profit margin on gasoline is about 77% higher than it was in 2019. And the profit margins have more than doubled for a couple periods in the post-COVID era. So yes, retailers are taking a bigger chunk of the price of gas as a profit margin. And before everybody goes howling about how much gas stations are ripping off drivers, keep in mind, we have pretty tight supplies of gasoline. We have a limit on refineries. There's basically a ceiling there. So we don't have as, supply is pretty tight, and that actually gives retailers pricing power. This is what some people have been calling greedflation, and it is kind of a thing.
Greedflation, as in when companies set the prices artificially, right? Because of this expectation that prices are going up.
It's the price. I mean, let's remember, in capitalism, producers at the wholesale level and retailers selling to consumers, everybody wants to sell their product for the highest price they can get. Usually competition, it helps bring prices down because people, sellers compete with each other. But when you've got strong demand, which we have because Americans have been buying stuff like crazy, and now they're out and about and traveling and buying gasoline. And when you have tight supply, those are the two factors that actually give sellers pricing power. So that's why they're able to charge these prices.
Really quickly, Rick, this is a question that always comes up when we talk about gas prices. To what extent is that price dictated by those individual gas stations? How much of it is the oil company's oil price? What's the breakdown?
Right. So despite rising profit margins, the cost of oil is still the biggest factor in gasoline. And rather than thinking that it is the sellers that are dictating the price, I think the biggest factor there is the lack of refining capacity. We have actually lost refining capacity in the United States, and we'll probably never have a new petroleum refinery built in the United States. So that's a bottleneck. Even when oil prices are low, we have a bottleneck on refining, and I think that constricts supply, and that gives retailers pricing power.
Rick Newman, thanks so much for breaking this down for us. Really appreciate it.
Bye, guys.